Coming up, China's US tariff response. We take a closer look at reporting season and another day and another record for gold. The details next. Hello, it is your daily 10-minute business and finance news wrap for this Wednesday, the 5th of February 2025. The Australian share market rose today by 0.5%. Agnus Geddes from Fat Profits will have the details in a few moments. But first, China has responded to the US's import tariffs with its own. For more, I spoke with Andrew McAuley, the Chief Investment Officer at UBS Global Wealth Management, Australia. So, Andrew, the latest news is China's retaliatory response to the US's 10% tariff on Chinese imports. So that's its own tariffs on US coal, LNG, and oil and agri-equipment. Some businesses like Google and Calvin Klein will also be impacted. But how would you describe the way China has reacted? And could it have been even worse or more stronger?
I would describe it as controlled and selective. So if you look at the things that they're applying tariffs to, none of them are particularly significant. For example, Google has about 1% market share in China. So mentioning that committing to a review of Google and their operations in China, I don't think we would worry Google too much. Coal from the US, LNG, other energy, oil, they're all small. So yes, definitely it could have been worse.
What kind of a message then do you think it's trying to send by doing that?
I would say the Chinese are saying we're ready to negotiate. They're saying to Mr. Trump, yes, we have responded to your 10% tariff. And they have to respond. You know, they've got a domestic audience just like the US has. So they've responded, but they've responded in a way that sends a message, I think, that let's talk and let's work this out.
Is there any, are there any short-term silver linings for Australia as a resources exporter? And does it at all increase the chances of China adding some bigger stimulus?
Well, there's pros and cons for Australia. If you look at the tariffs that China has applied themselves, obviously Australia, net exporter of energy, an exporter of coal, an exporter of LNG. So anything that makes us more competitive is good for Australia. But we believe tariffs ultimately are negative for global growth. They increase prices, and theoretically will probably decrease demand as a result and reduce the velocity of trade. So from that perspective, it's not good for Australia. So I would say in the short term, if these tariffs are in fact applied, and we don't have any sort of guarantee that they've actually been applied, in the short term, it's good for Australia. In the long term, if it takes quite a while for the negotiations to occur and these tariffs are in place both ways, then that's negative for Australia.
If we start with the US's initial decision to tariff goods imported from Canada, Mexico and China, why do you think they started, or the US started with those three?
Well, I think it makes sense geographically. Trump's issues are the import of fentanyl. Certainly, it appears the statistics support it's coming in from Mexico. Not so much Canada. I didn't realise Canada was such a fentanyl capital, but apparently they are. The other thing is immigration. So that's been a real touch point for the Republicans and through the election. So I think he had to do something. And most of the illegal immigration is coming from Mexico. And the other thing is there are deficits with these countries, less so with Canada, but more so with Mexico. And that's because Mexico is a low-cost, lower wages jurisdiction. So there's a lot of manufacturing that happens in Mexico, assembly of parts, assembly of fully completed products that come to the US.
He's been quite vocal in saying that the EU could be next. Do you think that's the likely path?
Well, he's alluded to that, hasn't he? He said that quite possibly, I think it was in response to a question from the media, quite possibly Europe will be next. But, we'll have to wait and see. What we've learnt with Mr. Trump is using tariffs as a negotiating tool, that what he says isn't always exactly what happens. And we know from Trump 1.0 that he can change his position very quickly. 1 week he'll say a tariff's on, like we've seen just recently. He said that the tariffs are delayed. Ultimately, what we see in the long term will probably be quite different to what we're seeing or hearing now.
Does that administration have anything to gain by placing tariffs on Australia? Is that likely, or should Australia be more concerned about what happens with China?
Yeah, I think tariff-wise, Australia is in a good position. So we have a trade deficit with the States. We import much more from the States than we export. And also we're a big investor in the US. We're a big investor in infrastructure through the industry super funds. And there's plenty of examples of businesses that are investing there. So there's a lot of capital flowing from Australia to the US. So I think we've got less to worry about there. I'd be very, very surprised. But on the other hand, the impact on growth, we think if the tariffs are applied as they've said to apply, as we see the situation now, it could knock up to 0.8% of global GDP. And Australia, that's not good for Australia.
What does this all mean for investors, though? And have you had to change the way you're investing as a result? Because we've seen some locally listed companies like Fisher & Paykel Healthcare, Amcor today warning that they're not immune to a tariff war. And also overnight, the maker of Barbie, Mattel, saying they may have to potentially increase prices as a result. So are you going to have to adjust the way you invest?
Certainly at the macro level, it's made us consider the downside more closely. So I mentioned that GDP growth would be expected to fall given the tariffs as they currently are enunciated. And you could also get higher inflation in the States. And if that means the Fed slows or delays their rate cuts, then that's not good for markets. So at the moment, we're very, very positive or reasonably positive on equities as a house. And that certainly could make us reassess that. Bonds have reacted fairly calmly. Yields are high in bonds, and we see bonds as a good way to protect portfolios. But the proof's in the pudding. We need more information. We need to know what's actually going to happen. Right now, we wouldn't be saying to clients to change anything in a major way, given the news. The news seems to change every night on tariffs.
That's Andrew McAuley there from UBS Global Wealth Management Australia. Now, Market Day on the SBS On The Money podcast. Good day for the Australian share market. The S&P ASX 200 up 0.5%. For more, Rhanya Bosch spoke with Agnus Geddes from Fat Profits.
I think there's a perception in the market that the Trump administration are negotiating. The tariffs that he's sort of threatening to impose lately, 10%, definitely less than feared. I think the market was looking for a much bigger levy, so it's good news on that front. And it's also good to see President Xi, President Trump actually talking through some of the trade issues. So for now it looks like the actual levies are not going to be nowhere near as bad as what the market was looking for after President Trump was elected.
Now, as well as all this tariff talk, we obviously have reporting season that seems to be driving a little bit of the market action as well. Out of the US overnight, there were some big names reporting. Who caught your eye?
Look, I think the Palantir result shot the lights out. One of the big US tech companies, the stock was up 30% after they reported. But there has been some disappointment as well. Not so much through bad earnings results, but given those valuations over there are so stretched and the hurdle rate is so high in terms of market expectations, profit results that came through from Alphabet, for example, weren't just quite as good as what the market was looking for. The market is priced to perfection, but we're not getting shoot the lights out earnings results.
Yeah, reporting season is also in the spotlight locally. Amcor reported its results today. Things really heating up next week. What is it that you're expecting from this reporting season, just in terms of general themes?
Look, I think the earnings season is going to be fairly subdued. The economy hasn't exactly been firing on all four cylinders, so expectations are quite low, and I think most companies will probably sort of deliver into that. It would be good if we had a few rate cuts, which sort of turbocharged the environment looking out over the next few quarters. So, perhaps better times ahead for the stock market.
And turning back to the global outlook briefly, we did have China that reopened its stock market for the first time since the Lunar New Year break. What happened there?
I think it was quite a good response. We saw only a muted reaction in China and Hong Kong to those trade tariffs. That's encouraging. And, the response could have been a lot worse, particularly if the US had imposed levies of more than 10%. So, so far so good. And of course, what's good for China in terms of this trade outcome and these negotiations with the US has got to be good for Australia. I think there's a good probability that Beijing will come forward with a decent fiscal stimulus package next month to shore up their own economy. And of course, that's good for Australia given those resource materials linkages. And, we have seen a couple of good days now in the Australian resources sector, with the likes of BHP, Rio, Fortescue Metals all doing a lot better.
Yeah, talking commodities, gold has hit another record today. Why?
I think, the central banks definitely been accumulating a lot of gold, recently. But I think the big news really today was that, President Trump wouldn't rule out a strike on Iran. I think tensions there are beginning to heat up. He disclosed today that, there was an assassination plan on him a couple of months ago. So, things in the Middle East are far from peaceful. And of course, geopolitical tensions really benefit precious metals, that flight to safety, safe haven trade.
You're seeing the opportunities for investors at the moment?
Look, we like the precious metals, certainly the gold sector at the moment. The Australian spot gold price went to nearly 4,600 this week. And at that price, the miners, the gold miners, are making a lot of good margin, a lot of free cash flow with that Australian dollar down at 62 cents. So, I think that sector's got further to go. And also, we can't really rule out that there's going to be a lot of mergers and acquisitions activity within the sector. It's just cheaper to buy for many of these gold miners, cheaper to buy one another than build new mines.
That's Agnus Geddes there from Fat Profits. Don't forget, if you do enjoy this podcast, give it a rating on Apple Podcasts or Spotify, and to click that subscribe button to be alerted to when there are new posts.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.